Friday, June 30th, 1:14 p.m. New York time. Well, today's the last trading day of the month, last trading day of the week, last trading day of the quarter. The market's still open, but I'm done trading. Got to do a review of my swing trades. But first, let's look at the market. S&P 500 today, green. Also gapped up. This gap down has been filled. Yep. But now we have a new gap from here to there. My strategy this week was doing trades on the breakouts to the upside mostly. So looking here, again, Friday, Thursday, Wednesday, Tuesday, Monday. We have almost green days almost all this week, right? Friday green, again, it's not done yet till 4 p.m. Thursday, Wednesday, Tuesday, Monday. Big trade, big momentum on Monday. Coming to the holiday weekend, United States, Independence Day. So typically you have bullish bias. I was looking for breakouts above the highs of each one to buy trades in the mornings. See these inside candles, these yellow ones? Today, NASDAQ 100 also gapped above that inside candle. Dow Jones Industrial Average, that was an inside candle on Wednesday. Thursday, we broke above it. Today, gapped up. Many trades I was able to take. Not necessarily the same one every day, going back and forth between the S&P 500, the NASDAQ, and this one I didn't take. No, this one, when I did that, I was actually doing the S&P 500. Look here, Dow Transports also, huge momentum up. Dow Utilities, not so much, and the Russell 2000 momentum up. But it's these top three. This was I was trading the stock ETFs with options on those stock ETFs, outright buying the call options, single-legged. They weren't spreads. Nope, they were all options that were expiring today, as well as ones that were expiring the same day. Worked out well. Let's go look at a few. So here on the SPY stock ETF, this trade on this day was 627 Monday. Yep, I bought the call options. They were set to expire, or they do expire, today. 3 days. See that little purchase? They had 3 days to expire. It was a 439 strike. The momentum was up so nice here, so I closed them the same day. The original plan was to keep them open until Friday as a swing trade, but it made enough profits, gains in that one day. And also the indexes themselves were not all participating, breakouts. So I closed it, took profits. So this one here, again, opened there, closed that day. Bought at $45 and closed at $62. Again, that's a 439 strike, which expires today on the calls. Looking here at the call options, that expired today. 439 strike, $462, left a lot of money on the table. Again, I bought at $45, I closed at $62. I made profits, left a lot of money on the table. Oh, the struggle's real. So again, what was originally a swing trade here, I closed it as a day trade. Okay, go on to the next. This one I placed yesterday. I was considering to do as a day trade, but I did buy the ones that expired today. I had no problem closing it yesterday, but I decided to keep it open. Yep. So same thing. They were the ones that expired Friday, which is today, and the delta was 18. Delta here was 17. Try to get anywhere around the 19. So this 441. Which I bought yesterday, the call strikes 441. Bought them for $37 here. And then we gapped up this morning. And within the first 5 minutes, they were closed $114 per contract. Again, 441 strikes. Let's go look at what they are now. I already saw them earlier. They were like 380 something. So same contract, 30 June. Looking at the 441 strikes. 260. Again, I bought them at 37, closed at 114, left a lot of money on the table, but they're less now than they were earlier this morning. Understand, I told you, saw them 380 something. Well, looking at the chart, part of it has to do with time decay. Yeah, we're almost at the high for the day, but time decay is going away. So just because the stock is higher doesn't mean that premium is going to continue going higher. You have time decay. They expire today. Yep. A lot of money left on the table. Looking here on the daily chart on the right, and if I didn't say, sorry, here on the left chart, it's 30 minutes, 30-minute candles. So last week I was doing swing trades and I had several losers because I thought it was ready to pop, but didn't. That day I bought them and I closed them here. They lost. Yep. So that was a bad period last week on those instruments. Day trading, I did good. I did day trades on those too, but my swing trades didn't work out. Such is life. Took chance, took the risk, and did it. Let's see if I got the day trade showing up on here. Yep, I did some day trades here, both directions. So that was past Friday. These are spreads, and they worked out fine. Bullish on that day and bearish there in the morning. That was Monday. So different trades, different strategies, but worked out. And again, they were pretty fast. Scalps. That being said, let's go on the next. I also did QQQ, which is the stock ETF, if you don't know, for the NASDAQ 100. Put it on this side too. Same thing. The left chart is 30-minute. The right chart is the daily. So originally this was going to be considered as a swing trade, but I did it, switched it to a day trade. See that again? These contracts expired today. I bought them on Wednesday, but I had the flexibility because again, I could day trade them, close them that same day, or left them further out. Again, I closed them the same day. You see here, let me move that down. There we go, opened and closed. The delta is 20. Again, they fluctuate pretty fast as the price is moving anywhere between 18, 19, 20, 22. But on average, I'm looking around that 19 delta. So that being on Wednesday, again, look at today, it gapped up. So I bought call options, and certainly they're going to be worth a lot more. Let's go see how they are now. $30 June, call options. 367 strike. Let's double check. 367 strike on the call side. 367, 293. Again, the stock is almost near the high of the day, but we have time decay, so they're not the max high, which they were this morning, much worth more. So 367 worth $299. Well, when I bought them back on that day, I paid $30 per contract. Remember, I sold them, paid $30, and I sold them at $56. Profits, winners, nice. But again, hindsight, buying them back on this day here, Wednesday for $30. Yep, $30, and look at that, $281. Left a lot of money on the table. Okay, those were options on the stock indexes. Let's go look at some other options I did as swing trades. GLD. GLD is the stock ETF of the gold futures. I placed this trade yesterday. Bullish. I bought call options that expired today. You see here on the right, gold was green yesterday. I bought it near the end of the day, and we are higher today. Closed early this morning. So Again, the contract June 30th expires today. And the delta was 27. And the contract was 178. Contract 178. Let's cue it in. $178. They're worth less now. They were higher earlier, but I bought these again yesterday near the end of the day. And I bought them for $22 a contract, and they're 48. I already sold them, so took my profit. Kept them on they were higher. I don't remember what the highs they were this morning, but they were higher. So I took my profit. Again, left money on the table. It's better than losing. Yeah. So look at that. It's near the high of the day right now. But the premium, the decay is coming in. Next, let's go look at some penny stocks I've been trading. I did not use options on the penny stocks, no. First one is Hood, Robinhood. I bought that day. And look at that. I thought it was going to have a trend pullback. I like that. I got in early. My plan was actually go the next day. I didn't. I got in early that day. Shame on me. I was looking for that breakout there for the trend to continue going higher. See this trend from here to there? I thought that was going to occur here. Well, it didn't. So I bought there, closed 3 days ago. And when I saw this occur, I actually got out near the high. I said, wow, that's a bearish pin bar, inverse from that swing high. Swing high here, broke above it, selling off, closed. Yeah. Yep. So I made 49 cents a share. Yep. It's meme stock. So it worked out fine. Didn't lose, still made money, didn't make a fortune. But you could do volume, large quantity of these shares if you want, because the stock's not expensive. Let's go on to the next. Rig. Huge trading range today. Huge. Look at that. Still almost near the high. This is a trade I trade often. Used to trade often. Closed today. Purchased it all the way back there. And I actually accumulated it a few times, didn't I? I know I bought it again sometime later down here. So I bought shares there and sometime again. And then had that huge pop-up from yesterday. I got my alert. And then today took out that swing high. Closed them all too. And I closed it early this morning at $6.90. So 17 cents left on the table. What did I pay for back then? $6.12. Again, profits worked out fine. So that's the plan. Swing trades. Swing trade could be from 2 days, 2 weeks, 1 month. Typically, my swing trades are under 45 days with the options, and for the stocks, on average, I try to keep them under a week or two. So obviously, some of them are in longer, and some are out faster. Like we see Hood here. Overlap from 1 week to the other. And finish this off by seeding this SPY. Oops, SPY. The options on the indexes have great liquidity. The ones I'm showing you, that's another reason I'm trading those. Versus many other stocks, I'm only going to trade the stocks, not the options. Yeah. So again, now I have to be concerned. I'll show you this on the cash index, and then we're finished here. So here, let's extend this out. This is the S&P 500 cash index. We had this huge trend down, came all the way into a Fibonacci level, 0.618. Deep retracement from here. And then we have this reversal go up. My concern is because this retracement was so deep And now it's retesting the swing high. It might be a failure up here. We may not have that continuation coming into next week. Very concerning. We have a gap down here that still needs to be filled. We have a new gap over here. See how things go. But when I put this in the S&P 500 futures also, it didn't occur exactly the same. No, the retracement only went down to 50%. But both retracements were deep. And now they're both coming up to the swing high. But the S&P 500 futures did not take out the high. No, not yet. The market will close soon, but very concerned, almost near the year high. This is a cup forming. Let me show you here again on the cash index. There we go with the cash index. So the cash index, which trades from 9:30 a.m. to 5 p.m., did break above that swing high, but not the S&P 500 futures. Very concerning.